Hello and welcome to another Daily Dose of Insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today is Monday, so we have Macro Monday here at Container Exchange, where we typically look at the week ahead and what kind of key data points are to be released that will move and shape the markets. Let me quickly share my screen to give you a little bit more guidance of what I'm talking about. So pretty much there's three key questions for the market right now, and the market will observe very, very closely how this week's data points will either substantiate or negate those hypotheses or questions. First one was last month's US job data. So it was very disappointing job data, just a glitch or a sign of a coming recession. So essentially the question that the market's asking here is whether these disappointing jobs numbers were a sign of early job shedding and timidness in the market, or whether the industry is already preparing for a coming downturn. Second, then very much related to that, whether the Fed has acted too slowly to cut interest rates. So at the beginning of this year, we have already heard voices, or the market has already expected rate cuts, and this has not materialized until now. The last week and the week before was still very much a discussion of in September interest rate cuts. But the question is whether this was too slow and whether the Fed now has to overcompensate by moving much faster. And then the last one is, will China succeed in propping up its domestic economy? So there's increasing articles and data points that show how China tries to prop up domestic spending, etc. And the question is whether this will materialize and work out. Key data points to be released this week. Tomorrow, Germany Economic Sentiment Index expected to deteriorate significantly from 41.8 to 33 points. Please note this is a minus 100 to plus 100 scale, so it's not as significant as if this were 0 to 100. Tomorrow as well, very important US producer price inflation for July, expected plus 0.1% month on month versus a plus 0.2% increase in June. Of course, there can be a lot of seasonality in there in these month on month figures. But then on Wednesday, we have US inflation data coming in, and I think that's the most anticipated data point of this week. It's both core inflation as well as general inflation, and both figures expected to remain stable. General inflation at 3% and core inflation, which the Fed monitors very closely, at 3.3%. And these 3.3% or 3% are still above the 2% range that the Fed targets, similar to most major central banks in the world. So the question is whether the Fed will essentially go ahead and cut interest rates despite inflation being more sticky than previously anticipated. And then lastly, on Thursday, we have Chinese industrial production slowing to 5.0% growth still year on year versus 5.3% in the previous month, while retail sales actually accelerated to 3.0% year on year versus 2% in the last month. And this is a little bit of a sign that there is a success in China in propping up its domestic economy. How sustainable that is another question, but of course this is a positive indicator. Now that's it from us for today. Thanks a lot for tuning in. Have a fantastic week ahead, and monitor those data points. Take care.